crypto crash, is now the time to buy the dip? As Bitcoin, BTC, this week fell below $33,000 for the first time in around 12 months, and with Ethereum, ETH, and Cardano, ADA, also tumbling, the crypto market appears to be crashing, or at least going through a major correction. Given the old investment adage "buy the dip," investors may now be looking for a piece of the volatile crypto market in hopes this marks a temporary downturn rather than a long-term bear market. If you're thinking now is the time to buy, here's a look at previous trends, some expert opinion and tips on buying if you're new to cryptocurrency. Significant losses. Month-on-month asterisk, the price of BTC is down more than 20% to around $32,000 today. Back in November 2021, it traded for as much as $69,000. A more than 50% drop represents significant losses. ETH saw similar losses to Bitcoin over the past month, down to around $2,400, while Cardano, ADA, suffered even worse, falling by almost a third, 32%, to $0.69. While this doesn't yet match the severity of the 2018 crash, in which Bitcoin lost 80% of its value, experts say things could still get worse for those left holding BTC. It's these kinds of losses that have prompted the UK finance regulator, the Financial Conduct Authority, FCA, to issue repeated warnings to crypto investors. It says there are no guarantees of returns and that people should be prepared to lose everything they invest. Inflation, downturn, and war. Co-founder of automated crypto trading platform thinks crypto is undergoing the same stresses as other parts of the economy, leading to the fall in prices. He said, "It's not just crypto that's down, everything is down, and over the next 6 to 12 months the economic outlook is bad. Central banks are between a rock and a hard place with regard to slow economic growth and high inflation. So, investors are escaping risk on assets like crypto and tech stocks." As for whether this downturn marks the beginning of a long-term trend or a temporary blip, Gyberstein believes the market could remain challenging for up to 2 years, but added things could worsen during that time. Sam Kopelman of crypto exchange Luno agreed that Bitcoin and other coins' misfortunes weren't happening in isolation. Falling below $30,000 leaves Bitcoin on the precipice of a key support level. If Bitcoin falls below this support level, it could even drop further to $25,000 before any significant move back up. Investors dumped assets across the board yesterday as global stocks suffered the worst day since June 2020. The market is battling the consequences of rapidly rising US interest rates, alongside military conflict in Europe. Inflation information out this week from the US Labor Department and the UK's Office for National Statistics will likely have a knock-on effect for interest rates and, in turn, crypto prices. Kopelman says the reports in the US and UK should provide more clarity of market moves over the coming weeks, but expects a volatile week ahead. Is buy the dip a good strategy? The principle of buy the dip is based on an assumption price drops are temporary aberrations that correct themselves over time. Dip buyers hope to exploit dips by buying at a relative discount and reaping the rewards when prices rise again. Crypto markets are volatile, so buying cryptocurrencies at any price, let alone a dip that might become a long-term trend, is risky. While prices could return to previous levels, they could also fall even further, leaving your investment underwater. If the past is prologue, then the current dip, or crash, depending on your perspective, could bounce back as it did last year, when prices fell to similar levels before returning to pre-dip levels and even peaking in the autumn. But of course, they might not. Bitcoin prices in particular have shown a degree of seasonality to date, appearing to fall in value to lesser or greater extents in the spring before bouncing back in early summer. However, as with every kind of investment, let alone the unpredictable world of cryptocurrencies, past performance is no guarantee of future results. Oleg Gyberstein said, "Many a novice investor has been burned trying to catch falling knives." He advises those committed to buying the dip to decide on a set amount of money they're comfortable with using to buy BTC or ETH each month and not to worry too much about what happens to prices over the next 2 years. Pavel Matveev of digital exchange Wirex advises buyers to hedge their bets. He said, "It's important to diversify your crypto portfolios with different altcoins to mitigate risks. That means factors that traditionally affect stock markets like rising inflation, geopolitical crises, and concern over tighter monetary policy by the Fed are also affecting the crypto markets right now. The Fed delivered the first rate hike in 22 years on May 4th, in an effort to combat inflation, which slowed to 8.3% in April, according to the latest inflation report. Some experts also believe that Terra UST, one of the largest stablecoins, played a role in Bitcoin's crash earlier this month. UST is intended to be pegged to the US dollar, but it sank as low as 12 cents and collapsed in a pseudo-bank run as investors panicked and sold off their tokens. Last week, Terra relaunched a new version of its failed Luna cryptocurrency, but not UST. Bitcoin hasn't been above $50,000 since December 25, 2021. Despite the ups and downs, Bitcoin has stayed above its January low point below $34,000, which was the lowest it had been in the previous 6 months. Bitcoin's price has seen a 40% drop in value since its all-time high above $68,000 on November 10, set back by surging inflation, lagging recovery in the job market, and the Fed's ongoing signals that it would begin winding down pandemic measures to support the economy. Bitcoin's price has been between $28,000 and $31,000 so far this week. What does this price drop mean for crypto investors? For those who invest in crypto for the long term using a buy and hold strategy, price swings are to be expected. Big dips are nothing to be overly worried about, according to Humphrey Yang, the personal finance expert behind Humphrey Talks, who says he avoids checking his own investments during volatile market dips. I've been through the 2017 cycle, too, Yang says, referencing the crypto crash of 2017 that saw many major cryptocurrencies, including Bitcoin, lose major value. I know that these things are super volatile, like some days they can go down 80%. Experts recommend keeping your cryptocurrency investments to under 5% of your portfolio. If you've done that, then don't stress about the swings, because they're going to keep happening, according to Bill Noble, Chief Technical Analyst at Token Metrics, a cryptocurrency analytics platform. Volatility is as old as the hills, and it's not going anywhere, Noble says. It's something you have to deal with. As long as your crypto investments don't stand in the way of your other financial goals and you've only put in what you're ultimately okay with losing. Yang recommends using the same strategy that works for all long-term investments: set it and forget it. What if you're interested in crypto, but haven't yet invested? Yang's set it and forget it approach to crypto reflects his philosophy for investing in the traditional stock market. But some experts feel cryptocurrency is too different from traditional investments to draw any historical comparisons. That's why Ashira Nelson of Savvy Girl Money is staying well away. Nelson primarily invests in low-cost index funds because I can see history on that, she says. The newness of cryptocurrency and lack of trackable data make her wary of these crazy swings. Potential investors looking to buy the dip should understand that fluctuations are par for the course and be prepared for this kind of volatility going forward. Even if you invest now, with prices relatively low, be prepared for them to fall even more. Again, only put in what you're comfortable with losing after you've covered other financial priorities, like emergency savings and more traditional retirement funds. Thanks for watching.